This is the weekly chart of Freeport-McMoRan, and this is a company in the basic material space with mining primarily in copper, but also some other metals as well. And on this chart, we have two sets of cycle brackets. The black cycle bracket is 21 bars in length, and it represents the average cycle length of Freeport-McMoRan. The red cycle bracket is 20 bars in length and it represents the average cycle length of copper futures. So before I talk about this current cycle, I want to take a look at the prior cycle that formed its low right here back in August. Notice the peak of the cycle here, and very shortly after that, the shift to negative momentum with the reversal scout. Then notice the depth of the retracement down to just below the 78.6% fib of the move from there to there. So the depth of that retracement told us that the probabilities favored FCX not being able to take out this prior cycle high, and it didn't. This current cycle began, and we got to move up, a retest of the cycle low support, and then the reversal scout turned green to show positive momentum. FCX got up to the 78.6% fib retracement of this move, and that was the peak of the cycle. Reversal scout turned negative again, and now the retracement is down towards the 78.6% fib at about $42. We have a weekly cycle timing window coming up from November 25th to January 3rd. That's the area between these blue vertical dashed lines when we would expect this current cycle to form a trough and then begin to move up into the rising phase of the next cycle. So our initial price target for the time frame is that $42 level. If it just chops around in here, it's already been met. We got down just to $42 exactly this morning. If it wants to be weaker than that, our next level down would be this cycle low support at about $39. Now let's take a look over on the daily chart. Here we have an average daily cycle length of 33 bars. That's the black cycle brackets. The light red one is for copper futures again. And a couple of things to note here. The move up to the middle of this resistance zone in the rising phase of this cycle, then the failure and the break below the cycle low support. So this is a left-hand translation, meaning that the cycle peaked on the left side, leaving a long time for a decline because we aren't expecting this cycle to trough until this time frame out here again between these blue vertical dotted lines, which is from December 11th to December 19th. Now that time frame fits within the cycle timing window back on the weekly chart. So this cycle is considered to be in sync with the weekly cycle timing window, and daily cycles that are in sync have a high probability of showing weakness or possibly even breakdowns like this one as the short-term and intermediate-term synced troughs form. So we highlight those over on our cycle low timing tracker. We highlight those here in this box on the bottom right of the cycle low timing tracker. Now, FCX has been in this box since November 4th. And because of that, I've been watching for a possible breakdown. And sure enough, we got that earlier this week. So momentum is negative in the FCX with the reversal scout and the slim ribbon. If I switch over to the area chart, you can also see another one of our tools, the option bias indicator, sitting at an N3 down here, and that suggests that we should consider a bearish bias in our options trades. So I recorded an options trade idea video today for this analysis in Freeport-McMoRan using Tasty Trade, and if you'd like to see that video, please consider becoming a level 3 or 4 askSlim member.